Hello again, everyone. Welcome back. This is a market wrap up for the week ending Friday, June 6th. Let's start off here with the ETF dashboard. In the index ETFs, everything was positive. The most positive was the Russell 2000. So all of a sudden it's coming to life. But, the move that it made wasn't all that spectacular, although it was up 3.3%. Everything was positive. Over here on the year to date, though, it is the only one that is negative. The Dow is back into positive territory. The Qs continue to lead on the year. When we look at the 16 sectors that I track every week, okay, we're back to 13 up and 3 down, just like the prior week. So we've had back-to-back strength in here. And now we've gone from 8 up and 8 down on year to date to a little bit more positive with 10 positive and 6 negative. The leader to the upside for the week was semiconductors, 5.4%. So pretty strong little bounce in here. And then the consumer staples were the weakest. Year to date, home construction continues to be way, way down in the tank, down minus 12.3%. And I think they're going to have to get the home builders turned around, we're going to have to get interest rates dropping. And I don't know when that's going to happen. We'll see. And then XLI continues to be the leader of the upside. It's been strength showing here now for weeks and weeks, up 10% on the year. Okay, that's where we sit with the ETF dashboard for this week. Let's take a look at the Dow Diamonds. So on Friday, the Dow Diamonds were up 441. The Dow Industrials were up like 400 and what was the actual number? 443 points. So we had this range that it had been in, and it just kind of stuck its head above there and then ducked back down. So I wouldn't call that a breakout of any kind. In my mind, it looks kind of weak. For the week, it was up $5.53. It did push above that the week of May 18th, which we'd had an inside candle last week. And then, now we're breaking above that high. So that's a little bit of a positive. We'll see what kind of strength we continue to get in there. Let's take a look at the SPY. Now, this is interesting. Up $6.09 on Friday and up $9.75 for the week. So again, breaking out in here, prior week's high, going above the previous week's highs, although we had that inside candle here the week before last. This nice move, but when I look at the daily, it gives me pause. Okay, so here's what I noted to my members during the week. On Wednesday, we had this very, very compressed day, and it was the most compressed day. I went back and checked every one of these days. This was more compressed, and between the range between high and low for the day, you have to go back to right here on February 14th to get a day that's tighter than what occurred this last Wednesday. And notice how after that February 14th, we had 2 more days where we kind of pushed a little bit higher, and then that was it. And it rolled over and broke down. Well, we've had 2 more days of pushing a little bit higher, and then we get this little doji type candle for Friday. We'll see what happens. So the Elliott Wave count that I've got on here is this. I have moved to what I was holding as the alternate count. So let me go to the weekly here, and that might help a little bit better. Okay. Let me do this. So I was thinking, because of this zigzag for wave 2, that we were going to get a more of a sideways development in here and have like a WXY. But when I started looking at this more and more, I started thinking, well, we actually did get a flat, which is kind of considered to be a sideways move, even though we got a deep C wave down, because we had an A, B, came back up beyond the beginning of the wave A. And so I just said, okay, I'm going to move to this count for a 4th wave, and then we'll see, and I'll hold the alternate as this is a W. Okay, so right now I'm looking at this as 1, 2, and these are just linked together. It's just kind of a path forward right now. So what I'm focusing on is is wave one done? Where are we? So when I look at this and I think, well, here's what it looks like 1, 2, 3 to me, and then possibly 4, although it's a very, very shallow wave 4 when you talk about 4 as a percent of 3. So my target typically for like a wave 4 is down here at 38.2. Now it has satisfied a minimum of 23.6, but if we continue to come down, this would be my first target down here around 563 on the SPY. And we may go deeper. I mean, it could also, the other possibility is we continue to flush out a little bit more. This wave 4 holds here, and then we get into a much deeper wave 2 to correct this first wave. So those are the things I'm watching for. Right now, I think this is suspect, and it's suspect because we're starting to see, we're seeing divergence show up, not confirming the price action move in here. Okay, so that's where we sit with the SPY. Let's take a look at the Qs. Okay, the Qs on Friday, talk about tight little doji candle, up 5.13. Great, yeah, we closed on Thursday here and we gapped up and didn't go anywhere. I mean, the range, high to low, $3.59 on the Qs. Nothing. I mean, we're up into that, I've got it labeled as somewhat of a resistance zone because this is where it basically traded from mid-December to mid-February in here. And that's right where we are. We're right up into that mix. And so we're getting the same kind of divergences showing up. And so watching for this to roll over and start to break down also. But we need to start to see the price action, get below the 10-day moving average and start to roll over like it did back here in February. Okay, so hasn't quite done that yet. Let's take a look at IWM. This was up $3.37. So here's the move for this last week. You can see, let me show you the weekly view. Up 683. So this is the move that generated the 3-point-something% move on the dashboard that said, okay, it was the biggest percentage mover of the 4. Okay, so that's what we're looking at here. But then when you look at what happened on Friday, it's just like, wow, this doesn't look super strong. I mean, the volume dropped off from Thursday. We'll see what kind of follow through we get. I'm actually expecting this wave 2. I've got it labeled as 1 and 2. I'm expecting this to roll over and break down. We started to get some of that back over in here, but we didn't get any follow through. So that's what we're watching here on IWM. Now, again, this has been really the weakest one amongst all the major indices. So I was trying to get bullish on it, but right now I just struggle with that. Okay, so let's take a look at, I know, I had a couple of things I wanted to show you. Back about the SPY. Let me show you, let's go back to this. And let me show you this tweet I came across, or post, whatever you want to call it. That Sven Heinrich, if you pronounce it there, Henrik, put out. And he's talking about all the unfilled gaps in the SPX. Now, what he's showing you here, when you drill in and blow up and look at the chart, it's a 15-minute chart of the SPX since the April lows. So he's saying, look, these are all unfilled gaps. Now, another view of that I've shared with my members is this view. Okay, is looking at the E-mini S&P 500 futures that trade. This is an hourly chart. Okay, so the dark shading is during the day session. The light gray in here, the gray, is the overnight session. The market has a tendency, it's not a rule, it doesn't have to do this, but it has a tendency to tag overnight lows and overnight highs. Sometimes it does it the next day, sometimes it takes days, sometimes it takes weeks. These are all the overnight lows that I've identified since early April that have not been tagged yet during the day. Okay, so really keeping an eye on this, but what's interesting is it kind of syncs up with what's going on with the open gaps that are occurring also. And again, there's no rule that says gaps have to be filled. It's a tendency for the market to go back and fill the gaps. And you know, like the gaps have a tendency to attract, just like magnets, let's say. Okay, but sometimes it takes days, sometimes it takes weeks, or even longer. So that's the picture where we sit with the S&P. I want to take a look at a couple of the commodities, but let's start off with the Bloomberg Commodity Index. I want to show you what's going on with that. And here's what I show the members is this. So this is a weekly view of the Bloomberg Commodity Index. It was up $3.32 this week. After last week looking like, you know, they're pulling the rug out from underneath it, it just totally reversed, gapped up at the open this week and just pushed higher. This is the highest close since the week of March 23rd in here. It looks like it's trying to get above all this congestion, sideways type move that we've been in really for, what, 2, 4, 6, about 8 weeks or so. Okay, so this is an interesting picture. This is the key area that it's got to get above to have an indication that commodities are really taking off. So we'll be watching that. Here's the longer term picture of the Bloomberg Commodity Index. This is all the data I've got back into 2001. So you can see long-term trend was broken back here at the end of 2020, going into 2021. Had a big, strong move. We've pulled back. It looks like we're trying to get a turn going in here, but we got to get above that resistance area in order to make that happen. All right, so that's the overall Bloomberg Commodity Index. Let's take a look at what WTI is, West Texas Intermediate. Here we go. For the week, up $3.79. Okay, so this is what I'm looking at in here. And this is what we're watching to see, is this low going to hold and this continue to push? Right now, it looks like it wants to do that. Okay, so that's oil. Now let's take a look at silver, and then I'm gonna look at gold quickly. Let me start off with SLV. Let me go here to the weekly view. Had a really strong week this week, up $2.69. On Friday, it was up 24 cents. So just a little continued push in here after having that really nice breakout. It had a big move on Monday. Then we just compressed Tuesday, Wednesday, then a continuation on a big gap up on Thursday, and very, very nice move this week. Okay, so here's the picture. What I'm continuing to hold is a bullish count. I think we're in a third wave and thirds of thirds, actually, continuing to work our way up, and we're getting a breakout. This looks like a really nice swing move to the upside. You know, we are at like 12 year highs, I believe, 12 and a half year highs back to 2012. And the prior high was like $48 in 2011. So if this continues to push, this is going to be a really, really interesting picture. All right, let me go and take a look at GLD, and then I'm going to show you the comparison between the two. All right, so GLD down $4.15 on Friday, up $1.58 for the week. So we continue to struggle since the high on April 22nd. I'm still holding the bull count. I'm still thinking that we've got more to go to flesh out a 5-wave move and complete the sequence that we're in. So we'll see how much longer we go. We'll see if we can continue to push to the upside. All right, so that is gold. And let me go. What I want to show you is the comparison in here between gold and silver when I overlap them. And let me scroll out a little bit, take the bigger view. What's interesting is silver's been clearly lagging GLD, okay? SLV has been clearly lagging GLD. It did the same thing for a while back over here in 2010, 2011, just kind of hanging back, hanging there. So it could be interesting. We get up to $48. We're at $32.69 here on SLV and $305.18 here on GLD. All right, so that's the interesting comparison between the two. It's been pretty obvious that SLV has been kind of lagging. And if it plays catch up, Could be a nice trade. All right, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. If you'd like more of this information on a regular basis, we put these videos out almost every day. Head on over to joehenches.net. Check out the website and the membership.